You take a look at some of this data, which isn't softening quickly enough, and you hear the hardline talk from the Federal Reserve. What's your sense about how far behind we are in terms of lag effects and when we'll actually see the ramifications?
Well, Lisa, as you know, we had many discussions last year where I said that inflation was not transitory, was going to be a real problem, and it still is. And I mean, interestingly enough, in the numbers that Mike went over, he didn't mention the prices received data by manufacturing firms in the Philadelphia region, which, like in the New York region, went up to 34 and change from about 31. So we're far from having defeated inflation at this point. And I would also take a little bit of issue on the rent story for two reasons. One of which is rents in the CPI are rising roughly in line with the overall CPI. So they're neither adding nor subtracting to the overall rate of inflation, where people, paying for housing, paying for food, paying for energy are really important in forming people's inflation expectations. So the fact that new rents are declining when people are paying the higher level of existing rents, I don't think it's inappropriate. But this idea that we always take out the bits that are pushing up inflation and look at inflation excluding that, I find a bit problematic because policymakers never do it the other way.
Okay, this is really important because there are all these people coming out there, and this is the biggest pushback and the reason why we've gotten lifts in markets. People say there are disinflationary elements, and you pointed to the rent story, you point to the used cars, you push back and you say that those are completely offset and then some by the other indicators. Is that right? Well,
yes. I mean, look, we've had, and I actually think Fed policymakers are somewhat on top of this. We've had 3 times this year, 3 months of the 10 months which have had CPI data, where the so-called core, excluding food and energy, only went up by 0.3%. And it was then followed by inflation picking up again. So, yes, one report where you got an odd treatment from healthcare costs. Health insurance costs fell 4% in the CPI. Now, I'd love to have that health insurance policy, and I'm sure most people out there would love to have that, but I don't think anybody's health insurance costs fell by 4%. But my point is, inflation is the overall price index, and you can pick and choose and take this number out and take that number out. But the reality is, inflation both here and globally is a problem, and central banks have created, or at least made the problem worse, by staying too easy for too long after the pandemic. And that liquidity and that stimulus has to be soaked up. Now, just 1 second, Tom, if I may.
Please.
There is a communication issue going on at the Fed, a further change in communication. Say, look, there's 3 things about policy. How fast are we going to raise rates? And they've clearly signaled they're going to slow the pace of increases, and the market's got that story right. Then how high are we going to raise rates to? And then how long are we going to keep them there? And I think the market's got the how fast right. It's slowing. But I still think we're offside on how high and how long rates are going to stay there. Markets are pricing in barely reaching 5% on the Fed funds rate, and then the Fed quickly cutting rates thereafter.